Gold snapped a two-day decline on Thursday. Demand from Chinese investors helped this precious metal rise again. I'm joined by O Byrne, founder and director of GoldCore in Dublin. Some gold investors, Mark, are worried that strong US economic data could prompt the Fed to start tapering. Many were flocking to gold as a hedge against inflation. Now, what is your take on the US data, and is it a concern for gold?
Yeah, well, it's our belief that the US economy is much weaker than is believed. The recent jobs data was quite positive, but a lot of the data has actually been quite mixed. And also the jobs data, basically, if you drill down into the actual statistics that come out of the BLS, the Bureau of Labor Statistics, basically it shows that there's something like 20% of the US population is what's called underemployed, and these are people who've actually given up looking for work. There's also the fact that some 48 million US citizens are on food stamps. That's roughly about 16 or 17% of the population, and that number has been increasing consistently over the last 2 or 3 years. So we think the recovery is somewhat exaggerated, and we think therefore that tapering is very unlikely in the short term, and potentially if the US economy deteriorates as we think it could well do in 2014, we believe that tapering could possibly increase from 85 billion a month to who knows, 90, 95 billion, 100 billion. And I suppose it's important to note that I think the gravity of the situation is sometimes not understood by people and forgotten by people. I mean, the fact that the US, the largest economy in the world, has to print currency to buy their own mortgage bonds and to buy their own US treasuries is absolutely astounding. And the fact that they have to do 85 billion every single month is absolutely astounding. I mean, to put that number in perspective, the capitalization of Twitter is about 20 billion, one of the largest tech companies that was launched recently. So yeah, the economy is much worse than is expected and than is believed, should I say, and that's why we believe that inflation the QE that has happened will lead to inflation, and we believe that people who have bought gold as a hedge against inflation will be rewarded in the medium to long term, and they need to always focus on the medium to long term.
Many are predicting China to overtake India as the largest consumer of gold this year, and this week we are seeing a pickup in demand as a result of lower prices. Can you tell us more about demand and what are your forecasts for gold?
Yeah, well, I think the China gold story is absolutely huge, and the scale of it is not appreciated by many people in the marketplace just yet. We believe that it genuinely is a paradigm shift. It's always dangerous to talk about paradigm shifts, and oftentimes these things don't tend to be paradigm shifts, but China to the gold market is absolutely a paradigm shift, and that's because the per capita consumption of 1.3 billion people is increasing from a near zero base, because Chinese people were banned from owning gold from 1950 to 2003. Chairman Mao banned gold ownership. Then the market was liberalized in 2003. Since then, Chinese demand has been increasing every single year, year upon year. And this year, as you said, it's going to surpass 1,000 tons, and China will become the largest buyer of gold. What's interesting to note is that 1,000 tons is simply the gold that's been imported through Hong Kong. There is a huge amount of other gold that's being imported through other cities in China, from Australia, from South America, and indeed from Africa. So the demand could be well and will be well above 1,000 tons. And I suppose to put that figure, well, that's a huge amount of gold. The annual gold production is about 2,600, 2,700 tons per year. So China is likely to hoover up about half of global annual production. But to put it, so it's a very large number in tonnage terms, but in dollar terms, it's actually not that much, because I did the sums on it this morning, and that 1,000 tons of gold is worth about $39 billion at today's prices, which is roughly what the Federal Reserve is printing in 2 weeks. So that suggests to us very strongly that the demand we've seen, the increase in demand we've seen from China in recent years, is very sustainable, and it will continue, and potentially could even increase, particularly if the Chinese economy is to slow down significantly. And I suppose that is one of the reasons why we would be very, very positive on gold in the medium to long term. We're negative in the short term. We think the technicals are very poor, and we think the momentum is down in the short term. but we are very positive in the medium to long term, and we believe that the inflation-adjusted record high gold price of $2,400 per ounce seen in 1980 will be surpassed in the coming years. But we would caution people that the price is volatile, and anything can happen in the short term, and that's the reason why people should consider dollar cost averaging and gradually accumulating position over time.
International investors are diversifying into physical bullion with a preference for storage in Switzerland. Can you tell us more about this, Mark?
Yeah, there's very interesting things going on regarding gold and Switzerland. One of which is the huge amount of gold that's flowing into Switzerland. One of the reasons for that is that institutional gold is flowing out of London into Switzerland. It's going from the institutional marketplace in London. So the very large bars used both by central banks and also by bullion banks, they're called London Good Delivery Bars. So each one of these bars is 400 troy ounces. Those bars have been exported into Switzerland in very high volumes, and they're going into the refineries in Switzerland, and then those large bars are being melted down into smaller bars, which are very popular in the Asian marketplace. Particularly 1 kilogram gold bars are very popular in Asia and particularly in China. So that's a very interesting development and something to keep an eye on. There is also the fact that Swiss people themselves are buying gold. They have an affinity for gold. I suppose the same is happening in Germany and Austria. Of all the countries in Europe, Switzerland and Germany have the highest per capita consumption of gold, and that's because I suppose there's an understanding in these countries that gold is a store of value and financial insurance. I suppose finally, there are people internationally. We have clients in over 40 countries, and many of our clients in the Eurozone and in the UK, they like to store gold in Zurich and elsewhere in Switzerland because in allocated accounts, because Switzerland has a tradition of respecting private property. It's very, very, very safe in terms of the economy. Is very, very sound, and so it's a good place for people to store assets and basically to protect their wealth. And we're seeing quite a degree of demand in that regard, which is interesting as well.
Great, thank you, Mark. Viewers, thank you very much for joining us for today's Commodities Corner, and see you again soon. Goodbye for now.